Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Nick Theodorakos. But let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
All right, so we're talking Disney down in your hood in Florida here. You know, we've got some activist investors involved. Nelson Peltz trying to get on the board. Bob Iger's back in the fold. What kind of data are you seeing? We're seeing a nice rebound in Disney, but this is coming off nearly 3-year lows.
Yeah, big bounce though. I mean, it's right up to that $100 mark, which investors put a lot of faith in. So it's hitting it. It's from the bottom. So we'll see if it can break through. It's had some trouble. I think back in November, it had a lot of trouble getting through this level. But when we look at Disney, there's really, I think, two main factors, right? You're looking at the vacation side of it, and you're looking at the streaming side of it. First of all, if we look at the vacation side, we can track the number of people that visit their website that basically sends them to all the different vacation destinations, either Disney World, Disneyland, a cruise, or their Disney Vacation Club. And you can see that it's actually plus 26% year over year, and we're actually higher than we were at this time in 2020, which was pre-COVID. We were like 3 weeks ahead of COVID at this time in 2020. So this is actually a really good sign, starting to pick up. I think there was a lot of pent-up demand, and so they're taking advantage of that, and that side of the business is doing really well. When you look at the streaming side, it's kind of broken up into pieces because they've got so many. They've got Disney Plus, they've got ESPN, they've got Hulu. Overall, streaming itself, you can see it's down about 7% year over year. So they've got a bit of a headwind. This isn't Disney specific. This is just general people talking about streaming overall. So it's down a little bit year over year. People are starting to watch less streaming and just, I guess, get out and enjoy real life. So that's good for them, but maybe not great for Disney. But when you break it down by category, ESPN is probably doing the best, and that's because of live sports. Live sports is really taking off. It's up about 43% year over year, and the only other one that's up is theatrical releases, up about, I think, 2% year over year. So the rest of the categories, original series, movies, syndicated, they're all down, and syndicated is actually down the most. So ESPN is sort of leading the way when it comes to Disney's streaming side of things, and Disney Plus itself is not doing so great. I mean, they lost about $1.5 billion in Q4, which was way up from a year ago. They lost $630 million. So they're going the wrong way. They do predict that section will be profitable in 2 years. They're going to try to lower costs, increase the price, and start an ad model. So we'll see how that turns out with consumer happiness. Right now, they do have the highest happiness level of all the streamers. People love Disney, but their Disney Plus itself has not been doing really well, but Disney's being carried on the streaming side by ESPN.
I was so happy, Landon, when you brought this symbol, because there's so much data out there, right? From a physical perspective, from a streaming perspective. You guys can track so much, and I appreciate you bringing all this. I was watching football, and halftime, The Mandalorian was, they're teasing the new show. This fits right into it. I was just shocked to see in your data when you sent this over that original content is down so much, because you remember back, a year ago, pandemic times, like Netflix, everything was original content. They were ruling the world because it was original content. Are you seeing that same type of drop across the board, and just people aren't that interested in the original content that's out there right now?
I think it's a high watermark kind of situation. I think that just like you said, COVID really changed a lot of behavior, and people were watching a lot more TV. And I think some of that behavior stuck around for a while, but I think it's slowly drifting off. And that's why we're seeing streaming down. We're seeing original series down. Not a ton. It's down about 10%. Not a huge move, but just watching movies or watching broadcast series or syndicated television is down significantly. So I think that people are more into the new and interesting stuff. So live sports is up tremendously. Theatrical releases is up. So I think that it's more novelty, I think, that people are looking for, and just those original series. I don't know. Maybe people are just, I don't want to say getting bored with them, but they don't have the same number of hours per day to dedicate to watch this series and that series and this series as we did, 2 years ago when everyone was, basically shut in and all the places were closed. So you watch more TV.
Yeah, and Landon, they focus so much, the investors do, the street does, they focus so much on the streaming aspect of Disney. I understand, they spent way too much, they have spent way too much, but just your data on live sports and how important ESPN has become again. Remember, ESPN was their leader as far as advertising revenue just as short as 3 or 4 years ago, started going down, but now it's back up. But are investors and traders forgetting about the park business as much and some of the, whether it's hotels, whether it's cruises, whether it's going to one of the theme parks, are they overlooking that too much? Because if you look at the airline data that you guys have given us over the last couple of days, I mean, it's been off the charts as far as demand goes, and we saw that out of United's results and Delta and also American Airlines pre-announcing.
Yeah, I think you're absolutely right. I think that it's sexier to think about streaming because the upside could be so big, right? If Disney Plus and Hulu and ESPN can sort of beat out Netflix and beat out all the others, the upside is so big that that's where people want to see multiples on. But you've got a huge revenue maker in all the physical spaces. And just like you talked about, I mean, for the first time, we've seen the TSA pre-check numbers higher this month than they were pre-COVID. So people are getting back out there, and that goes right along with the Disney vacation numbers, the website being up 26% higher than it was at this time pre-COVID. So everybody is getting back out there, and those parks are just absolute money makers. I mean, the margins that they get on every visitor is unbelievable. So to see that at plus 26% year over year, I think as an investor, that would get me excited. As I would be thinking, let's go streaming, let's get 4x, 5x, 10x, let's go on streaming. You can't get that on the properties, but it is a big money maker. And Disney's, I think it's a difference between sort of this safe company that is going to just churn out money versus a growth stock. And that's kind of like the two sectors of Disney, right? The two divisions, streaming versus physical. And the streaming is more of a growth stock where people want to see multiples, and I just don't think they translate that over into the physical, where plus 26% year over year is really, really good.
Yeah, now we don't have earnings for about 3 weeks on this one. Want to kind of bring it up just because it has done pretty well, up nearly 15% so far this month. If you had an earnings score today, are you neutral, or what's your bias here?
Pretty neutral. We don't officially cover Disney because they have so many products and services that we can't. Covering them would be the equivalent of covering about 100 of our companies. So we just, we look at each individual brand, but we don't cover the whole thing. If I had to look at it and sort of weight them, it would be pretty close to zero, but maybe slightly positive because the parks are doing well.
All right, great stuff. Great data as always. A little bit neutral here on Disney. Yeah, and I think ESPN Live Sports is the way to go. And Netflix, by the way, pulling back on maybe some of their content spend. I think Bob Iger's probably going to do the same thing as far as Disney goes on the streaming side. All right, Landon, great stuff as always. Appreciate it.
All right, guys, thanks.
All right, Landon Swan, co-founder of LikeFolio. Okay, Nick.